Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese dong exchange rate, the newest economic updates coming out of Vietnam, and why global investors are once again paying very close attention to the VND market. Over the last several days, financial analysts, currency traders, and international investors have continued monitoring the movement of the Vietnamese dong against the US dollar as fresh economic reports, central bank comments, and global geopolitical tensions continue shaping the direction of Asian currencies. According to the latest market data, the USD-VND exchange rate is currently trading around 26,350 to 26,360 Vietnamese dong per US dollar, showing that the Vietnamese currency remains relatively stable, despite strong pressure from global financial markets. Many analysts say that the stability of the Vietnamese dong during recent months is attracting international attention because several emerging market currencies have experienced heavy volatility, while Vietnam has managed to maintain controlled movement in its exchange rate. The State Bank of Vietnam has continued monitoring liquidity, foreign reserves, inflation, and foreign investment flows very carefully in order to avoid sudden shocks to the financial system. At the same time, investors are watching how global events, including energy prices, Middle East tensions, and US Federal Reserve policy decisions, could influence the strength of the US dollar in the coming weeks. Vietnamese banking officials recently acknowledged that geopolitical tensions and global market uncertainty have contributed to upward pressure on the USD-VND exchange rate, but authorities continue emphasizing that Vietnam's macroeconomic fundamentals remain strong. One of the biggest reasons behind continued confidence in the Vietnamese economy is the country's strong export sector. Vietnam has become one of the most important manufacturing and export hubs in Asia, with major international companies continuing to expand production facilities throughout the country. Experts say that consistent foreign direct investment into Vietnam has helped support the Vietnamese dong even during periods when the US dollar became stronger globally. International banks and economic institutions have continued highlighting Vietnam as one of Southeast Asia's strongest growth stories, with GDP growth projections remaining impressive compared to many other economies around the world. Recent reports from financial institutions, including UOB, suggest that Vietnam's economic growth could remain above 7% during 2026 if current investment and export trends continue. Analysts believe infrastructure spending, industrial expansion, technology manufacturing, and international trade partnerships will continue supporting economic momentum throughout the year. This positive outlook has helped improve long-term investor confidence in the Vietnamese dong, although short-term fluctuations against the US dollar are still expected because of global uncertainty. At the same time, some analysts remain cautious about the Vietnamese dong because the US dollar continues benefiting from safe haven demand during periods of international instability. Whenever geopolitical tensions increase globally, investors often move money into the US dollar, creating additional pressure on emerging market currencies. Recent reports noted that Middle East tensions and uncertainty surrounding energy prices contributed to renewed upward movement in the USD-VND exchange rate earlier this year. Vietnamese authorities responded by closely managing liquidity and monitoring currency trading activity in both official and unofficial markets. Financial experts also say that inflation trends remain extremely important for the future direction of the Vietnamese dong. If inflation remains under control while economic growth stays strong, Vietnam could continue attracting long-term investment from international institutions and multinational companies. Stable inflation also allows the central bank more flexibility when managing interest rates and monetary policy. However, if imported inflation rises because of higher oil prices or global supply disruptions, pressure on the currency could increase. Some recent economic commentary warned that rising global oil prices may affect inflation and exchange rate stability in Vietnam because the country remains connected to global commodity markets. Another major topic being discussed among investors is the difference between official banking exchange rates and activity in unofficial currency markets. Analysts have noted that black market exchange rates sometimes react faster to investor sentiment and external economic pressure. Earlier this year, unofficial market rates moved sharply higher during periods of strong dollar demand, before easing again after regulatory measures and central bank interventions. Experts say this demonstrates how closely authorities are monitoring speculative activity and trying to maintain stability within the financial system. Meanwhile, international currency analysts continue debating whether the US dollar could weaken later this year if the Federal Reserve eventually reduces interest rates. A weaker US dollar would potentially reduce pressure on Asian currencies, including the Vietnamese dong. Some banking forecasts suggest the Vietnamese dong could stabilize further during the second half of the year if global financial conditions improve and export activity remains healthy. Several economic reports have projected that USD VND levels could gradually ease later in 2026 if the dollar weakens internationally, and Vietnam continues posting strong trade and investment numbers. At the same time, analysts emphasize that Vietnam still faces several important challenges. Global trade uncertainty, tariff risks, fluctuating commodity prices, and changing investor sentiment could all impact the exchange rate. Some economists have pointed out that Vietnam's large trade relationship with the United States places the country in a sensitive position whenever discussions about tariffs or global trade policies intensify. Even though Vietnam's economy remains strong overall, international developments can still create temporary volatility for the Vietnamese dong. Despite these risks, many long-term investors continue viewing Vietnam as one of Asia's most promising emerging economies. International companies continue moving manufacturing operations into Vietnam because of competitive labor costs, improving infrastructure, and strong export connectivity. This ongoing industrial expansion is helping Vietnam strengthen its position in global supply chains. Analysts say that continued foreign investment inflows provide important support for the country's foreign reserves and currency stability. The banking sector in Vietnam has also remained active in maintaining confidence in the financial system. Large Vietnamese banks continue adjusting exchange rates carefully while responding to market demand and central bank guidance. Reports show that official bank exchange rates have remained within managed trading ranges even during periods of elevated volatility in global markets. Investors are paying close attention to these movements because stable banking activity often reflects broader confidence in the economy. Another important factor supporting Vietnam's long-term economic outlook is tourism recovery. As international travel activity continues improving, tourism revenues are helping strengthen foreign currency inflows into the country. Increased tourism activity supports hotels, airlines, restaurants, transportation businesses, and local services, creating additional economic momentum. Analysts believe stronger tourism performance could provide another positive factor supporting the Vietnamese economy during the remainder of 2026. Currency traders are also watching China very closely because the Chinese economy plays a major role in Asian trade activity. Any major slowdown or recovery in China can influence regional currencies, export demand, and investor sentiment across Southeast Asia. Because Vietnam maintains strong trade relationships with China, developments in the Chinese economy could indirectly affect the Vietnamese dong as well. Financial analysts say regional economic coordination and trade activity remain important themes for Asian currency markets this year. Recent market data indicates that the Vietnamese dong has remained relatively stable over the last several weeks compared to some other regional currencies. While there have been periods of upward pressure in the USD-VND exchange rate, analysts say the movements have remained manageable rather than disorderly. Several forecasts suggest that Vietnam's central bank still has policy tools available to maintain stability if global financial volatility increases again. Many retail investors online continue speculating about the possibility of dramatic future changes in the value of the Vietnamese dong, especially on social media platforms and YouTube channels, discussing currency investment opportunities. However, professional economists generally caution that exchange rates are influenced by many complex factors, including inflation, trade balances, central bank policy, interest rates, foreign reserves, and international market conditions. Most mainstream financial institutions expect gradual movements rather than sudden extreme currency revaluations. analysts continue encouraging investors to focus on official economic data and realistic market expectations instead of rumors circulating online. At the same time, supporters of the Vietnamese economy point to impressive growth in manufacturing exports, electronics production, renewable energy investment, and infrastructure modernization as reasons for optimism about the country's future. Vietnam has continued strengthening trade partnerships with countries around the world while benefiting from diversification within global supply chains. These trends have increased international interest in Vietnam's economic trajectory over the last several years. The Vietnamese government has also continued promoting infrastructure projects designed to improve transportation, logistics, and industrial productivity. Analysts believe these long-term investments could strengthen economic efficiency and attract even more foreign investment into Vietnam. Large infrastructure development programs often play an important role in sustaining economic growth because they create jobs while improving the country's competitiveness. Investors are watching these developments closely as they evaluate the future outlook for Vietnam's economy and currency stability. Financial experts also say that Vietnam's ability to balance economic growth with exchange rate stability will remain one of the most important policy challenges moving forward. Authorities want to maintain strong economic expansion while also preventing excessive inflation or instability in the currency market. Some economic commentators describe this balancing act as one of the key tests facing Vietnam's central bank during the current global economic environment. Meanwhile, the global US dollar index continues influencing almost every currency market worldwide. When the dollar strengthens sharply, emerging market currencies often face pressure because investors move money toward dollar-denominated assets. However, if expectations for US interest rate cuts increase later this year, some analysts believe the dollar could weaken moderately, potentially creating a more supportive environment for Asian currencies, including the Vietnamese dong. Currency traders continue monitoring every statement from the Federal Reserve because even small policy signals can influence exchange rates globally. Some recent financial reports suggested that the Vietnamese dong had actually performed more steadily than expected despite global challenges. Analysts say that Vietnam's export performance, foreign investment inflows, and economic growth helped prevent sharper depreciation pressure during periods when many other currencies experienced heavy volatility. This resilience has increased confidence among some international investors who see Vietnam as a relatively stable emerging market economy. Looking ahead, investors will continue watching several major factors, including inflation data, US Federal Reserve decisions, oil prices, geopolitical developments, export growth, tourism recovery, and foreign investment trends. Any major change in these areas could influence the future direction of the Vietnamese dong exchange rate. Analysts believe volatility may continue in the short term, but many institutions remain optimistic about Vietnam's medium and long-term economic outlook because of the country's strong industrial expansion and growing role in global trade. For now, the latest market update shows that the Vietnamese dong remains relatively stable, while global financial markets continue navigating uncertainty. The exchange rate remains under careful management by Vietnamese authorities, and international investors continue monitoring economic developments very closely. While speculation and rumors about massive currency changes continue circulating online, professional economists emphasize that realistic exchange rate movements are usually driven by long-term economic fundamentals rather than sudden dramatic events. This latest Vietnamese dong exchange rate update highlights how closely connected Vietnam's economy has become with global financial markets. Every development involving international trade, energy prices, central bank policy, and geopolitical tensions can influence investor sentiment toward the Vietnamese currency. At the same time, Vietnam's strong economic growth, manufacturing expansion, infrastructure investment, and foreign investment inflows continue providing important support for long-term confidence in the country's economy. As always, investors and viewers should continue for official economic reports, central bank announcements, and verified financial news sources when monitoring the Vietnamese dong market. The global economy remains highly dynamic, and exchange rate movements can change quickly depending on international developments. However, Vietnam continues positioning itself as one of Asia's most closely watched emerging economies, and many analysts believe the country will remain an important player in regional and global trade for years to come.